Okay.
Hello, and welcome to the March 2024 issue of the Zavitz and Sykora Financial Strategies video newsletter. Thank you for tuning in and listening to our update. I'm your advisor, Greg Sykora, and joined with me is Mark Zavitz. Today, we will be discussing model portfolio performance and then going over some tax tips while also giving a quick update again on Bear Trust and Bear Trust tax filing with some recent news that is hot off the press as of Friday. So let's get started. Well, pretty good numbers we're starting to see for year to date. Markets continue to chug along. Our models, specifically those with heavier stock and equity allocations, are doing extremely well. Mark, would love to hear your take again on what you think is driving the market, as well as why we're seeing this great rebound since about October of last year.
All right, Greg. Well, what's driving the market is a combination of things that are all positive at the same time. So, we finally got some relief on the inflation side, some consistent relief. We've got some data points that are confirming that, there's a very high probability that we're already in, or we're going to have a soft landing. We're going to start to see interest rates come down, 2 or 3 or 4 cuts in Canada, but more importantly, a couple of cuts in the States this year. And that's very supportive of the markets. On the earnings side, we've got good earnings, much better than the market expected. So we've got consistently we've got companies beating their earnings guidance, and so that's very helpful as well. On top of that, the market wants to go up too. It just wants to go up.
That's right.
Right. So what we've experienced in the last several months is a situation where people are very positive, and the capital's flowing into the equity markets, and it wants to go up. So there doesn't seem to be any reason to pull it down, with the various issues that are falling into line. So things are looking good, Greg.
Yeah. Well, that's a great point you just made, that last point about how people want to buy. It's a good segue for this next slide. So here is the CNN Fear and Greed Index. This is a screen capture as of this morning of what the index looks like. So, how it's measured. It's a long-term. It looks at long-term things like moving averages, the demand for risk in the market, all relative to fundamentals. So things like earnings. And right now, we're in a full bull market, as Mark just said, that has some froth to it. It's normal to see indicators in the greed section when people are buying. But given how fast markets have advanced, I wouldn't be surprised if we saw a pullback at some point in the near future. All very normal, and this would be coming off the back of, different equity markets performing differently different times. But most equity markets are up anywhere from between 10 to 25% since October of last year. And the tech equity index, being the NASDAQ, that's up over like 40 to 50%. So as long as corporate profitability continues to expand, I don't see any reason for why markets couldn't continue to chug along and move forward. Now, that is the main difference between this type of bull market and perhaps bull markets that we've seen back in 2007, 2008, or even 2000, 2001 with the dot-com bubble. If this type of index, the Fear and Greed Index, existed back then, the gauge would be going way past extreme greed and measuring, maybe 125 out of 10 when it comes to the amount of greed in the index. And that's because in those environments, markets were disconnected from fundamentals, and the earnings from the companies that were driving the stock market return, they weren't strong. There was lots of speculation. In essence, there were bubbles that were forming as a result of that. And this looks a lot different than those two times. So, I pay attention to this index. It's a nice visual, this fear and greed index. And I do look at it to get some sentiment. It's not the end all be all. However, it doesn't flash anything to me that seems to be of warning. And the fundamentals in the market, they support equity markets where they are. And I think they're going to continue to be positive and continue to support even higher stock returns in the future, as long as we have this soft landing.
Hey, Greg, where do you think what do you think the reading would be for Bitcoin right now?
uh, if we could go to 200, we would be in the 200 area for this gauge. Now, it always reminds me of the tulip index from the 1800s, where the price of tulips, which really don't create anything of economic value, but if you go back and you look at European markets dating back 200 to 300 years, there was a point in time, one of the first bubbles ever recorded, where tulips, which really don't do anything and have a very short lifespan, went up in value like 200,000%. And there are tulip farmers who got extremely rich over time. Anyway, there's some anecdotal stories about how certain tulip farmers, were selling tulips and, making tons of money. And then eventually they stopped producing tulips. And who was left with the tulips that died? Well, the suckers. So,
Greg, in the 1800s, people were paying thousands of dollars for tulips,
which don't do very much. And the same thing can be said for Bitcoin. It doesn't have any practical, implications right now. You don't really use it when you go to the store. It's a measure of currency, I guess, but again, we don't fully support it. We have some clients that like to buy it and own it. Good for them. They've done extremely well. But there's no fundamental story because it doesn't do anything of economic value. So tough for Mark and I to get behind.
Okay.
Last month, we talked about bare trust filing requirements in situations where, things like children where parents on bank accounts or investment accounts shared together, they need to file. Or if a parent or grandparent held investments in trust for their minor child, there was a chance they'd also have to file a bare trust tax return on T3. Well, on Friday, March 29th, the CRA announced you no longer need to file for 2023. My guess is they caught wind of how unpopular this new filing requirement was becoming. Now, they've said you will still need to file for 2024, but who knows if they're going to walk this change back completely or at some point throughout the year. So, to be determined, stay tuned. But good news for anyone who is concerned about needing to file and weren't sure if they needed to file or not, right? And I guess, for some people who have already hired an accountant and have filed, I don't know what the government's going to do, but, you've probably already spent $500 to $1,000 with an accountant needing to file. So definitely going to be some sore spots there for some people. Okay, I mentioned at the onset, we could talk about tax slips. Wanted to quickly point out the types of tax slips everyone gets. Now, if your only investment account is an RSP or a TFSA, a RIF, or a LIF account, these account types are known as registered accounts, and they don't generate any tax slips from the income from the investments inside of them. Now, if you're taking money out of your RSP or your RIF or your LIF, then you're going to receive a T4 RSP or T4 RIF corresponding to the amount you took out, as if it's income. But if you open or have an open account, you would have likely received a T3, a T5, or a T5008, which is if we've triggered some capital gains. All of these T slips need to be reported. Now, when it comes to reporting, here's what to know. Now, if you have this open non-registered account that's creating these T3, T5, T5008 tax slips, then in general, Mark and I recommend you wait until April 1st to file. The reason for that is because it takes the entire month of March for all of these tax slips to arrive. ETF tax slips arrive much later than mutual fund tax slips. here's a screenshot of when my tax slips arrived within my CRA My Account platform. And this is the platform that we recommend everyone sign up for and gain access to. And it tracks all of your tax slips. You can actually pull these tax slips up. You don't need the physical copies. So you can see my ETF tax slips just arrived March 27th. And my mutual fund tax slip arrived March 1st, which is the Global Environmental All Cap Fund. So I buy and own the same things as our clients. You can see that here. If your accountant files before the tax slips have all arrived using the CRA My Account data, which most accountants, when you enlist them to be your accountant or you pay for their services, they get you to sign a disclosure agreement, and they also ask for access to your CRA My Account so they can connect to it. Well, they're pulling that data and they're inputting it into their software. It's all done automatically now. And if you've asked them to file your taxes before March 27th, well, there's a chance that they've missed reporting tax slips or income, and you could get hit with a penalty for being reassessed. So just have that in mind. And as a reminder, now we moved most clients into fee-based accounts where you can see the service fee, everything's unbundled. Service fees for non-registered accounts are also tax deductible. So at the beginning of February, you should have received a fee statement if you have an open non-registered account. Make sure you or your accountant claims these fees against your taxable income, as they are fully deductible. Again, this is only for your non-registered account. You cannot claim fees or deduct fees for fees that are generated in your RSP, your TFSA, your RIF, your LIRA, or your RESP accounts. Alrighty, that wraps things up. Thank you so much for listening to our update. Mark and I hope you have a great month of April, and we look forward to producing our next update at the end of April. Bye now.
Bye, everyone.